So for those of you who are here, my name is Anya Leman, Innovation Director here at Ascender. Ascender is Pittsburgh's community for entrepreneurs. We offer educational programming. We have an incubator program that we actually just started. So we are welcoming 11 new companies to our incubator, and we're very excited to work with them. A couple of them are here too, Zach and Daniela there. I see them. And we offer free educational programming for entrepreneurs that happens every month, twice a month, such as this event today. And all of our events are organized within themes. So June's theme is Make Money Moves. So that's why we have a real talk with investors today. And our upcoming theme is closing the deal, and it's all about sales. So how can we help entrepreneurs really think about what is their sales strategy? What are some tools that they can utilize right away so that they can, close those deals and really, and we have prepared a curated list of resources to really help you along the way in regards to how do you set up your sales strategy, but also how do you go about really getting those deals. So Ben, our program coordinator here, is going to be putting important information and access to that to a page where you can find these resources and also our upcoming events. Our next event is on July 13th, starting with, we will be featuring Steve Kelly, and he will be walking entrepreneurs through how do you come up with a sales strategy. So more information on our Eventbrite. So I think that's it for events, but thank you everybody for joining us. We have a program full of a lot of great information and questions, and I'm really happy to introduce our Executive Director, Nadili Nunez, who will be kicking off the session today. So Nadili, it's on you.
All right, welcome everyone. It is 4:06 on this side of town, so I don't know what time it is, but it's time to have some fun, okay? We got some great investors I'm really excited to talk to today and for you to all hear from. We've got tons of questions. I mean, I'm scrolling and scrolling from questions that we received from you all, but I've got some of my own too. As usual, we're gonna have our guests introduce themselves a little bit, and then we're gonna dive right in. So Kathryn, how about you go first?
Yeah, mine is much shorter than the great Evan Segal's, but my name is Kathryn Cartini, and please call me Kate. I am a co-founder and partner at Chloe Capital. We're a movement-driven venture capital firm that invests in women-led technology companies with diverse leadership teams around the world. But in addition to investing with a gender and a diversity lens, we also partner with universities and foundations and corporations to host Invest in Women programs or fundraising catalysts for female founders. And we travel around the world hosting these Shark Tank style shows. And what we've learned is that our program participants typically raise a little over $1 million after participating in our program. So when we say invest in women, it really does mean more than writing a check. And we understand that it's the people that open the doors to the talent, to the other funding, and certainly to clients, new clients. So that is me. And I'm very happy to be here. Thank you.
Thank you so much. And just to add to that, since you brought it up, the way Chloe Capital goes to different cities, they're coming to Pittsburgh and they're partnering with Ascender to make it happen. So we just started. Yes, that's right. So keep an eye out for the opportunity to be part of this incredible program. I talked to different entrepreneurs who participated, and it was just been such a life-changing experience for them. So very excited for this partnership that we're bringing to Pittsburgh. And of course, Evan always has a hand in everything. So he's also a little bit part of this too. With that, we'll have him talk about himself.
Thank you, Nadili, Anya, and welcome everyone. And it's my pleasure to share the screen with all of you, but especially with Kathryn. I'm actually delighted to be one of the investors in Chloe Capital. And part of that journey is really learning from really talented female fund managers. So through my investment arm, Segal Ventures, I'm invested in a number of female and underrepresented funds and companies. And Chloe is right up at the top with, just an incredible group of female fund managers who, it's one of the interesting conversations we have, both in terms of Segal Ventures, but also I'm a founding partner of 412 Venture Fund. That is, our managing partner is Alana Diamond, many of you know, who was the founder of Alpha Lab and Alpha Lab Gear. So we're focused on helping companies that are kind of emanating from the Pittsburgh scene or have connections to Pittsburgh and help provide the capital that they need to go from kind of idea to commercialization to that Series A round. Very similar to what Kathryn said, for both me personally as well individually, I think two things stand out. First is that, here's the secret, everyone, diverse teams outperform all white male teams. Don't tell anyone, because that's how we're really succeeding. In fact, the statistics are pretty clear about that. And the second part is that we believe that what really drives success in many ways is people that kind of are there to guide and support entrepreneurs, a true founder first theme. At the 412 Venture Fund, we are all founders. So we have all had companies that have had successful exits. So we're not the typical fund managers who write checks. We're actually have been in your shoes, and hopefully some of the conversations that we're going to have today will be helpful. So with that said, there's a lot more to the background, but I also built a business in Pittsburgh that went from 2 million to 60 million, from 25 employees to 300 to 400 employees, with products all made in Pittsburgh. And happy to say that after the exit, the factory is still in the region, and people that work with me are still working there. So very, very proud of that legacy that continues on even today.
Fabulous. Thank you so much. All right, so we've all been here. We're going to do the warm up questions. It's the complete the sentence. It's our way for you to figure out, if it's your first time, what lens everyone here is coming from, and get some important information out in just a short amount of time. Okay, so for this first set of context and lens, Kate, how about you go first in finishing the sentence, and then Evan will answer after each one. Okay, so with the first one, I've been investing in startups for X amount of years. Kate?
Chloe Capital was launched in 2017, so it's been almost 5 years now.
Wow.
And then personally, probably 10 or so years.
All right, you've been around. Okay, Evan?
I'd say probably 15 to 20. The first investment was with Shauna Tellerman, who some of you may know is the founder of Modzy. Proud to say Shauna was my first investment, and we are friends today.
All right, nice. All right, I've invested in more than X number of companies. Kate?
I think I am up to about 30 if you include my personal portfolio and Chloe's portfolio.
All right, Evan?
Yeah, that sounds about, maybe a little more than that, but all good, that kind of range.
Yeah, but remember, Evan's also investing in funds. So it's totally a different ballgame. I mean, he is here and I am here.
But what is cool is that you get to invest, and one of the funds you invest have a unicorn. You get to one of the funds, Venture Collective, invested in something called Axiom Space, which is going to take over the space station. So cool. Gina Kirch and Nick, it's been awesome. So it's fun just being part of the ride.
That's true. It is a ride for sure. All right. So I or my fund normally invest between X number of dollars in a new startup.
Our first check size is between $100,000 to $250,000. And we have a goal of helping the founders raise at least $1 million when we participate in the round.
Okay, thank you, Evan.
Similarly, we'll do the typical checks 250 up to 500, and we'll at least double that, if not more, in a follow-on round. Occasionally, we will do a $50,000 check for a founder who we just, we see the spark, we see the passion, and we think through our experience, our background, and probably even more importantly, our LPs, who are very closely connected to what we're doing, can bring some unique value and help that business, hopefully support that founder on their journey.
Great, fabulous. All right, if I had to describe my investment strategy or mantra in 3 words, they would be?
Women-led, SaaS, B2B SaaS, diverse leadership team.
Okay, nice. Evan.
Um, I would agree with all those. And then I would probably add, one would be sustainability. Second would be, and try to figure out how to phrase this. I call it likability.
Mm.
Do you just get along? I mean,
Like coachability, and that kind of.
and
right.
it's just, you get to a point in life where you want to be with and support with people you like. And we'll get to this probably later when you talk about what not to do. But, when you get off a call and you just kind of look at each other like, what just happened? That's not a great sign. And I think the last thing is what I'll call value, which is what can we bring to the table? So beyond just writing a check, is there something that our fund can uniquely offer in terms of our backgrounds and our experience that will be helpful? Because if we're not bringing something to the table, we're just another check.
Right. Yeah, that's a good point. In fact, we had one of our previous incubator companies talk about how they raised they raised a round, but they're looking to raise a second round with actually different investors, more strategic investors, because the first round were people with checks who believe in them, truly believe in them, but don't have the network and don't have the other things. It's just the dollars, and they want to diversify their portfolio of investors, which I thought was really clever and smart. So think about that for anyone who's looking to raise. Who are you? Only because they have the checkbook doesn't mean dollars, they go away. Relationships can really bring a lot more.
Nadili, I'll add too, is that beyond just your investors, you can have a board of advisors. So, it is perfectly allowable to, find people with the skill sets you need for your company that, have nothing to do with writing a check, but can be helpful in the growth and evolution of your company.
Mm-hmm. Absolutely. Absolutely. All right. So speaking to things that you don't want to do, you mentioned, Evan, let's start with you here. When meeting a founder for the first time, what's the best and worst thing that they can do?
So for me, I want to know their story, their journey. Why are they passionate about what they're doing? Why does this mean something to them? On the other hand, if I feel on the other side, if it's very transactional, or if there's this arrogance to it, like you're doing me a favor by participating in this meeting, I think that can be a turnoff. When someone is kind of arrogant, kind of cocky, just overdoes it, can be an instant turnoff because they're really not the kind of person that you want to take the journey with.
Sure. What about you, Kate?
A pet peeve of mine in life in general is lying. And fundraising is a hard game because you are not going to be necessarily ready to take on inflows of cash at any given time. You're building, you're exploring, you're doing all of this, but early stage investors understand that, and that's what excites them. So I respond well to people who sit me down and say, here are the 3 things we are kicking butt at, and here are 3 things that I could use your help with. And no one is going to be doing everything perfect, so please don't tell me that you are. Please don't tell me that there's no one else out there doing what you're doing or any of those things, because a quick Google search will likely prove you wrong. So that's what I enjoy the most, is very transparent, quality conversations. Because listen, as I mentioned, our first check size is so small, it's only $100,000 to $250,000. That is not where our relationships, it's where a relationship starts. It's certainly where our relationship is not going to end. We are there to try to help you, to grow you, and then we want to put more money in. We want to put up to $1 million in. So if you out the gate lie to me about something, then our relationship is tarnished. And once you lose trust, just like in any kind of relationship, it's very hard to rebuild and grow back.
That's fair. I think that's so hard sometimes for the entrepreneur, because they think they need to impress you. And so they're going to build this fantasy, but in reality, you appreciate someone who can be forthright.
That's
Now,
right.
the storytelling is going to be interesting. You go on a date and someone first tells you about all their bad habits. Like, wait, let me get attached to something good first.
That's right.
So that it's tough. It's tough. But I
Right.
your point, a lot of investors say the same thing. Don't lie. This is going to be
Here's what
relationship.
makes me wonderful, and here's what you can help me with, right? Not here's what we are really doing wrong, or here's what we've have done wrong in the past. There's just a way of communicating it. And that has to also do with the investors whom you're choosing to pick, doing a little research on them and how they could potentially help you.
Mm-hmm. Absolutely. So true or false, or if you want to say, how much revenue should a startup be already generating before approaching you as an investor?
Is it back to me?
Yeah, go for it.
Okay. So, we have really grown up in these 5 years. And when we started, we were investing much earlier on. Right now, we are in a seed plus phase where you are getting ready for your Series A, like in 10 to 12 months or so. So we like to invest right before that Series A round and help you get there, and then reinvest in the Series A round by activating our preemptive rights. So there is our sweet spot.
Okay. Evan?
I think very similar, although because we are really trying to encourage Pittsburgh, companies with a Pittsburgh connection, we ideally, one of the kind of the things we want to see is some revenue, some paying customers. We want to see that. But, depending upon how, where the idea is, if we get strong customer validation, so we will go back through our own due diligence and talk to customers and, get a sense, is there something, that is needed in the market and they would pay for?
Okay. How much interest how do you gauge that?
I think if you go back to people you trust, so I'll give you one example. In the life sciences and health sciences, we've kind of broken it down into kind of, SaaS and devices, and then kind of, drugs that, are kind of into trials. And so you have devices, software, and drugs and trials. There's some LPs that we have that are, highly esteemed doctors in the community and are, kind of on, the boards or on the leadership of some of the top hospitals. We will go back to them and their kind of group to get a sense of where that is, but we won't stop there. So, I've got a friend who's actually one of our LP investors, who's also a Tepper grad, who spent 30 years helping small drug companies get approvals at the FDA and through all the approval process. And so we'll want to get a sense of, how realistic is this? Not only is there a need in the marketplace, but will people pay for it? And obviously the best way to gauge that is a paying customer. So it's not just, hypothetical, but you've got the real, the real deal of it.
Okay, that makes sense. Kate, looks like you got to redeem yourself from the chat.
Jeff, I'm happy to do it. This is for Jeff. The reason why this is a difficult question to answer is because it's not like investors have just a checklist. And there are KPIs that were key performance indicators that we're looking for, but there's so many other variables, particularly when you're a woman-led fund investing in diverse leadership teams and looking for underrepresented founders and underrepresented communities. Now, that being said, I can talk by example. So we have only in the portfolio at Chloe Capital of 11 companies, we only invested in one pre-seed company, meaning that she was not generating revenue yet. However, she had a signed contract and purchase order upon us providing her seed money, which activated the week after. So our money went to fulfilling her order. I'm just off with Jana Westbrook from Provider Pool this afternoon. She is about to close at $1 million of annual reoccurring revenue. Rihanna Lynn from Journey Foods, it will also be $1 million, closed last year at $1 million. So they do vary across the board, but the moral of the story is we have to see some proof of concept in the market, and we do need to make sure that you are at least generating a dollar. So now here's another example on the other side of the spectrum. We invested in Figure 8 Technology, an MIT spinout recently. Evan, I don't even know if you know about this one. This is a new one. And she has a huge contract with insurance agencies. She's got a full-time staff of 20 people. She is not generating $1 million in annual recurring revenue because it's about the science and building the technology for her. And then she'll go to bat with the sales. She just closed on this $20 million round and she will pump up the sales volume. So I wish that I could tell you we only invest in companies that are generating $100,000 or $1 million. But the fact of the matter is that's not Chloe's way.
I think the other thing I would add, Nadili, is that there's a split brain part of this for me in the sense of the 412 fund versus my own fund. As kind of my own fund and as a more of a angel investor, you're willing to put a little more risk and invest more in the person. When you are part of a fund and you're part of the decision making, you've taken on other people's money and you have a fiduciary responsibility to invest that wisely. And so that leads to, as a fund, you're going to be, not that you'll take smart risks, but you're going to want to see some traction, because you want to be able to, thoughtfully go back to your investors, your LPs, and say, here's the reasons why we invested in this company. And so while to some that might seem like a weird kind of distinction, or just like, why is that happening? It's because, frankly, angel and, the friends and family and angel investors invest, much, much more in the person. And then when you get to the fund, it's much more of a balance. You've got to have both. You've got to have both the team and the person, as well as some real traction in the market.
Yeah. So here's my little secret sauce. Again, it's not if you have X amount of dollars in the bank already. It's if I can look at your profit and loss statement quarter from quarter to quarter, and then I can estimate how high of a jump you've had each quarter. I just want to see how fast you get. And that makes me feel more comfortable as an investor. I'm an early stage investor. Chloe Capital invests in seed stage technology companies. So for us to get people like Evan their return on investment, we want to take those risks early so our spread, our margins can be larger. So that's why we're willing to take the risk, is because we have an opportunity to provide larger returns for our investors down the road. Okay. So I look at how fast you're getting there.
And two local examples, would be many of Allison Alvarez from Blast Point or Ryan Green from Gridwise. Both of those companies, myself and Andy made investments as angel investors, and they had come up through the CMU ecosystem. 412 made an investment in each of them, and then 412 subsequently made a follow-on investment in both of them. So, what you want as, a fund is that you want to be able to, feel great about a follow-on investment and bring other funds into it. And I think that's the other thing Kate had mentioned, is that we actually, everyone we talk to, and Alana's been really very insistent on this, is we try to help everyone that we talk to by making connections, even whether we invest or not. But we'll also connect them with other funds that have a focus, or maybe, we think, another fund may add tremendous value to them. We just made an investment in another kind of Pittsburgh company called Community Capital that's in the commercial credit space. We talked to another company that may or may not be right for us, but we think that they have a good opportunity with Community Capital. So we're working all the time thinking about how can we be supportive of the people that we're talking to. And I know Kate does the same thing, her and her team, all the time.
And I'll throw in Zach Malone there, who has been running Draper Triangle here and is now opening a new fund with Will Allen, retired NFL player. And I was talking to him a couple of weeks ago, and he was saying, you know, I'm happy to just provide any advice, or someone needs like pitch feedback. I don't want them to assume I will fund them, but I'm happy to, if it's a good fit for another fund I know, another investor I know, or an introduction to even a potential customer, I'm happy to do that. So think of investors as something beyond the checkbook. I think that's the running theme. And I really appreciate kind of that distinction of the kind of investor as the individual angel investor versus once you're part of a fund. And I kind of wanted to bring up, Kate, you had put on LinkedIn, I think it was like a year ago. I promise you, I don't stalk you, but you said no longer can investors sit in ivory towers. There's a new breed of VC. And so as you're seeing kind of this change of funds and investors, in what ways have they changed before the pandemic and currently the pandemic, and how can entrepreneurs use that information as they move forward to raise funds?
Sure, absolutely. So yeah, I did write that post, and I do remember doing that. And I think I was just sick of it. I was just sick of it because, you know, when I was building my career, I really remember the great lengths that we had to do to go into New York City or to go to Silicon Valley and to impress certain types of investors. And there is a new breed of investor in town. Evan invested in Chloe Capital without even meeting us in person. He was following along with us throughout the year, probably literally stalking me on LinkedIn, but in a very kind way, because he was trying to get to know me as well as he could during the pandemic without meeting us in person. So what I mean to say by that is you can be an investor without having an extreme IPO anymore. You can utilize your skill set in industry to help your companies and become a service-oriented investor. And those are the people at Chloe Capital. Now, my partner, Elisa Miller-Out, has had successful exits. But again, for us, it's more about being operators. It's more about rolling up our sleeves. People call us a movement because our check sizes are small, but we have a complete database of thousands of co-investors, and we know exactly what they're looking for. So it's almost like we're a recruiter. And when a portfolio company or a pipeline portfolio company comes under our radar, then we have quick access to contact those co-investors and again, raise millions instead of just putting in our check. If someone needs talent, then we've got a list of recruiters and staffing agencies that we partner with, lawyers, CPAs, marketing associates, and we get this all for free or discounted services because people are willing to help us and to assist. Our programs are only 48-hour programs. We love Techstars, we love Y Combinator, but when you are a busy woman and you are a mother or a primary caregiver, you cannot relocate your life to another city for months and months at a time to participate in these programs and gain access to these resources. So we had to build something that was more accommodating for people with that kind of a schedule, who couldn't go to the golf course and socialize, who couldn't go to the driving range and socialize to get those checks. All of these things played a part. So our programs have a lot of digital on the front end, and then there are 48 hours of meeting the other investors, meeting us, pitching, and receiving your offer, and then hightailing back to your team to build. So that's, I guess, kind of what I meant by move over, because there is a new breed of VC in town, and you really just can't sit there and ink anymore. You need to be differentiating yourself if you want the hot deals to come your way.
The other thing I'll add to that is Kathryn's part of a movement. She recently, I think about 10 months ago, joined something called Republic, which is a crowdfunding platform. And I've gotten to know Republic as well as WeFunder. Johnny Price, who's the head of business development, was a Kiva that I helped bring to Pittsburgh about 10 years ago. Now the game has changed because you can put that together on one line on the cap table, all the investors that come from a crowdfunding platform. And Kathryn, maybe you could just talk a little bit about that, because I think that's another really exciting change in the game, particularly for founders.
It really is. If I've got any predictions, it's that I don't think large institutions are going to continue to invest huge checks into venture capital firms. I think they're going to start their own funds, and I think it's going to be part of the curriculum. They're going to have student-run funds, and they're going to focus on venture capital and entrepreneurship on campus instead of investing that institutional capital. I think that micro VCs like Chloe Capital, unless you are specializing in something, I think a lot of them will fall to the curb. And I also think that angel networks and funds are going to dissipate, and crowdfunding will come in and take their place. Why? Because crowdfunding platforms like Republic, and Evan is right, I'm a venture partner with Republic. So crowdfunding platforms like Republic, you can be accredited and you can be non-accredited. And you are now raising, and all of that raise is consolidated on one line of a cap table. And the minimum investment in most cases can be $100. So some people may say, well, I don't want thousands of investors on my cap table, or I can't deal with communicating with thousands of investors. You no longer have to do that, because again, it's consolidated into the one platform, and it becomes more of a digital marketing experience than anything else. You can raise up to $1 million on Republic without getting an audit. You can now raise up to $5 million in crowdfunding with an audit. And they also do what's called Regulation A, or Reg A, where you can raise up to $75 million from accredited and non-accredited investors. It takes a little bit of a longer time. You have to get approval from the SEC and approval from FINRA. But after that, you are off to the races. And what people are using Regulation A as a bridge before they do a SPAC IPO. Okay, those little baby IPOs. So it's become a very interesting play. Now, I am a marketer. I'm a former journalist turned marketer turned VC. And I will always say that marketing, while as wonderful as I love it, will never replace sales. And I don't think that crowdfunding will ever replace venture capital, growth capital for you to go out there and really become a 100 million plus company. But I think it is a tremendous catalyst, and it only behooves you to take advantage of the marketing aspect of it, the community aspect of it, and the press that's associated with it.
And what's interesting is that as an investor, so two of the companies that I invested in through WeFunder, I've gone back on bigger investments as an individual. So one of the ones I love telling the story about is, you probably all heard the phrase, you can't reinvent the wheel. Well, there's a company called Shark Wheel. They reinvented the wheel. I think I invested just because I love saying that. They reinvented the wheel. But they did. And it's just fascinating. And then there's another company that's doing cancer treatments for dogs, which again, if you're a pet lover, melt me away. But I think what's interesting is that not only does it help you raise money, but it's a way to start getting your message out to the larger community. So that's part of the challenge, is that if you're a founder in Pittsburgh, there's certain family and friends, et cetera, but the reach tends to be limited. And so the question is, how can you use a digital platform to simultaneously raise money and tell your story and potentially open more doors for you? And again, that's one of the reasons why, I'm excited about it.
I'm kind of curious though, because actually this was a very popular question, was how do they get an introduction to an investor? And so we're talking about these sounds like great tech platforms, but if you think about the companies that you actually ended up investing in, if you give a percentage, how many of them was it that you found through a platform versus a warm or a cold introduction?
Oh, sure. So for us, our first 10 investments were participants in a Chloe Capital program, an Invest in Women program. And from there, how did we get that deal flow? Again, we are considered a movement because we descend on cities. We can't wait to come see you, Pittsburgh, because it's literally, we will be marching through your streets. We will be banging pots and pans. Like, I will totally bring my dog if you want me to. It's all hands on deck experience. And we contact and we work with every incubator, every accelerator, every other fund, network, blogger, TikToker out there. And we just put out the call for talent. And when we first started Chloe Capital, some of the people in upstate New York, the naysayers said, you'll never find enough quality deal flow that are just women-led companies. And the hairs on the back of our necks would just stand up and we would be like, respectfully, sir, you're full of bullshit. And they were, because obviously we found extraordinary champions. And while the data is proving, or while the data like PitchBook and Cambridge Associates, they have proven for us in studies over the past 5 years that women-led technology companies with diverse leadership teams are performing better, they're exiting faster, they're generating more revenue, they're producing more returns for their investors. Now, in the past year and a couple of months since we've launched our impact fund, we can just turn to our own statistics. We have more than doubled in value for our investors, our impact fund. And that, we're a technology company at the end of the day, and we collect as much data as the next person, so much more. But it's nice to be able to point to that, because as we continue to raise right alongside of all of you, we are asked the same questions over and over again. And I do a screen share and I say, what do you need? What do you want to see here? So I don't know if that answers the question. I think I always like to go on tangents, but more of the story is we're coming to see you. And if you have any deal flow, please send it.
Yes, I think that's reoccurring. Is just, they're not there. And in reality, well, what are you doing to find them? And sometimes we get comfortable in visiting the same coffee shop or the same location. For reality, innovation entrepreneurship is occurring everywhere. And so I'm really glad of the work that Chloe Capital is doing. Evan, I have a question for you. I'm curious, you invest in different types of businesses. First of all, both of you, do you invest in direct to consumer businesses? Just want to make sure that's clear for the folks here.
We have one or two companies that have a component of direct to consumer, but I wouldn't say it's our wheelhouse, no.
Okay. Evan, what about for you?
So, we're open-minded to it. And on a personal level, one of my favorites is Subtle Beauty. Rachel Reed is knocking it out of the block. She added a new product and she had 6 times higher sales in the day she introduced that product than she had in any other day. It's very exciting when that does happen. Another one that I'm invested in that you may know is Welly Bottle. So it's bamboo bottles that provide and give back. It's a great story. So there are some companies, but what's interesting is, companies tend to have multiple strategies. So you don't have to be strictly B2C. You can have a B2B component as part of it, whether that's licensing, whether that's white labeling. There's lots of interesting kind of components rather than just kind of, I think we're in a world now where people, basically have learned to change. One of my friends, when the pandemic hit, he was running a 100-year-old family business. And they sold 90% was to restaurants. They had to literally change the business in a week, the entire business model. And he said 2 things to me. He said, 1, I never knew I could move that quickly. And 2, I'll never go that slow again. Because and he said, the other thing is, it's hurting me financially, but I'm having more fun now than I ever did, because, when you're just on automatic pilot and doing the same thing over and over again, it gets to be boring. When someone turns your world upside down, that may seem like the worst thing in the world at that moment, but it just, you land on your feet, and that's the grit of an entrepreneur is you get up and you figure out the next step.
That's a really good point. And I think one of the questions here was sort of people who are, entrepreneurship feels like you're consistently on the edge of a cliff. Like you're either going to fly or you're going to plop down, right? And it's hard to come to an investor and pretend like everything's cool, everything's fine, it's going to be okay. And so one of the questions was sort of like, well, what do you do when an entrepreneur first approaches you and is feeling that way? They don't want to lie, to Kate's point, but they also don't want you to feel like it is going to fall down. They just need a little bit of that support.
So I give you one interesting example, and you guys know Gridwise. Mm-hmm. So Gridwise has a ride-sharing app that is working for gig drivers. As you can imagine, kind of the gig driver ride-sharing thing kind of crashed in the beginning of the pandemic. They kind of did a gut check and assessed it and said, okay, well, what is growing? Interestingly enough, takeout food. And so, the DoorDashers of the world and Uber Eats, et cetera, grew considerably, pharmacy deliveries, other deliveries, et cetera. And now the ride sharing's coming back, and they've also launched a third piece, which is Gridwise Analytics. So it's the data sharing piece. So, they got hit smack in the face with pandemic, as many businesses did. And, as an investor, you were worried, like, okay, they just lost a bunch of revenue. What's going to happen here? And again, I think it's just an interesting example of you learn to that resilience. One of my favorite quotes, there's actually a former Pittsburgher who's head of global strategy for SAP. His name is Vivek Bapat. And his quote, which I really take to heart, is to rise with humility and fall with resilience. And it's a really profound statement. And I think that, if you consider yourself an entrepreneur, that resilience part is really integral to your DNA.
Someone's playing some music. All right, that was a transition to the next question. Thank you for that. So speaking of when you fall with resilience or grow with grace, right? You think about the people around you and advisors and board of directors. Hey, Chax. Hi. The board of directors, advisors are important in that. And I think you had a fireside chat, Kate. Was it like fourth floor?
The fourth floor, right. Another one of our investors and our advisor, Sarah Feingold, she was the first general counsel for Etsy and Vroom.
Yes, there you go. And there you talked about the importance of surrounding yourself with a community that is supportive. And right. If it's not, then find another one. And part of that is your advisor and your advisory board. So for both of you, when you are looking at advisors and advisory boards of entrepreneurs, first of all, if an entrepreneur comes in and I have no one, not even an advisor to list, is that a red flag? And for those who do have one, what do you typically look for?
Yes, a great question. It's not a red flag depending on what stage of company you are. Certainly if you are in a series seed plus series A stage and you do not have advisors around you, yeah, I would be very speculative. I would not appreciate that at all. But if you are at ideation stage or even pre-seed stage and you don't have advisors yet, now's the time to assess what you need to get to the next level. And mind you, just because you grab an advisor in the very early stages, it doesn't mean that you will not outgrow that advisor. It's just thinking about how you're going to go from 1 employee to 10 employee to 20 to et cetera. And who do you need to surround yourself with in that given moment? And then you may say, well, Kate, isn't that opportunistic? And I'm saying, no, it's part of the journey. It's part of growth in life. It's just like when parents have babies and they grow up and then they go to college. They've got to let them go at some time because the professors and all of the other culture they're going to experience with traveling and everything else that goes along with it becomes the new education for that young adult. So I hope that that answers your question. I feel like I'm abandoning my friend Jeff because I'm not answering questions on the nose. I wish Jeff would come on camera.
Maybe he can pop out at the end. Evan, I'm curious for you, how does an entrepreneur or founder know how much to ask for?
So there's a balance here. And I think, this is really getting thoughtful in terms of understanding what you need for now. Also not being too far, so you're just constantly raising. So you want to give yourself enough runway in the raise. What I find fascinating is Allison Alvarez is she is having been through other startups and seeing startups whose goal was to sometimes, get the round raised as opposed to building a good organic company. So one of the key things I would always say is that focus on building a great company. Don't, the goal here shouldn't be the next round or the next round or the next round. Is what are the investments you need to build a great company? Know your cash flow, know your burn rate, and make good investments. And there are some founders that, we actually have to push a little bit to hire talent because, sometimes you're afraid to, spend money. What I will tell you, when you bring talented people on that fit with the team, it becomes, 1 and 1 equals 3 or 4 or 5. I mean, and it frees your time up as a founder to focus on other things. So, it really does make, to be thoughtful in terms of the amount you raise and, when you raise it, because otherwise you'll dilute yourself, very quickly.
That's absolutely, I appreciate that answer. And I see Jeff actually had a similar question I was going to ask next. And I wonder if it's the same, but, is it always about raising or getting a return dollar wise as much as possible? How do you measure the social value and impact a company can have? And how do you measure that value? And do you fund those?
Yeah, a fantastic question. So Chloe Capital is an impact fund. Okay, we are a firm that was built on both an investment thesis and an impact thesis. Our investment thesis is that we're looking for seed stage technology companies, and we have gravitated more to B2B SaaS marketplace models. But our impact statement is women-led companies with diverse leadership teams. And women-led for us means at least 20% on the cap table. Every day, I am not even kidding you, someone on LinkedIn emails me and says, well, I'm a guy, but I'm married, and my wife therefore owns 50% of what I own, so therefore I'm a women-led company. And I said, well, you're right, she does own everything that you have, but that's not what we're looking for. Like, I literally need to see 20% on the cap table owned by—
Hey, honesty though.
Someone that identifies as a female. That's right. That's right. So, so for us, as soon as we get past our impact thesis, now we can focus on the investment thesis and focus on driving those returns. Remember, this is not just my money. It's not just Elise's money. It's not just Eric or Monica's money. This is it's Evan's money. It's all of our other investors' money. And therefore, I have a fiduciary responsibility to get those returns back from them, for them. And we have a goal of getting a 3 times return. Again, less than a year, but now a little over a year, we have more than doubled the value of the impact fund. So we are really on track for that.
Just a clarifying question, a return of 3 times over how long?
So over the course of the fund, and a fund like generally can be 10 years, but that's not our goal. Our goal is 5 to 7.
Okay.
So if we're already at double in less than a year, we're really making great strides. But now we have to say, when we first started, Chloe Capital was actually, we started off with a little baby pilot, and it was a program to teach women how to invest. And it took us a year to raise $50,000, guys. I'm not even kidding you. It was crazy. And we invited several people to the program, and they each put in $5,000, and we invested in a mother of 5 from Ann Arbor, Michigan, Kim Gamez from Mi Petterino. And along the way, we knew that it was very difficult to find women that were going to be investors because they needed a lot more education around the opportunity. Women are fantastic at philanthropy, but investing is outside of their wheelhouse at the moment. So for us to go on and raise a fund, we knew our strategy needed to be a little different. And that's why we're thankful to have ambassadors, we like to call them, like Evan, who have come to the fund, and now they are showing other men the way forward. But the moral of that story is, in terms of the impact, we've got to have it go full circle. So if we want more women generating wealth, if we want more women investing, then yes, we could spend the time doing education, and we are having an impact investing course come out next month in partnership with New York State. But what we could also do was spend our time raising from whomever believed in our mission, people like Evan, and then we could make bets on women champions in industry, and then we can support them as service-oriented VCs so they're successful, and when they are successful, they can turn around and pay it forward and become the women investors. So I don't want to give it away, but I do have certain questions that I ask founders when I am interviewing them as part of the investment to see what.
Are you able to give us one or two? You don't have to give them all away.
Well, I mean, I say, what does it look like when you have a liquidity event? Do you retire and move to an island somewhere? Do you start another business? Would you become an angel investor or join a fund or firm and pay it forward, right? I ask those types of things, and every single one of the women in our portfolio companies are prepared to pay it forward, whether it's through Chloe Capital or some way else.
Fabulous. And I do want to ask Evan, from a return to an invest, because I hear different things depending on the fund. I hear 3 times on the investment. I've heard 10 times the investment. How you build a company is different for a 3 times investment versus a 10 times the investment. So for Evan, for you, 1, what is the return you're looking for? And 2, is it bad for an entrepreneur to ask in advance, what kind of return are you looking for, and see if it's a right fit? Because it's like a dating, it should be a mutual fit.
So I think, Kathryn, we're looking, kind of where the industry norms in terms of what are people looking for, because the reality is that, investors want, a excellent return, and they're not going to just invest in you because they like you. I mean, you've got to have a solid thesis, and you've got to have a track record to kind of prove that. But I wanted to kind of backtrack on one thing, which is really interesting, which is the idea that the return and impact are mutually exclusive or don't go hand in hand. Kathryn addressed that well, and it's one of the reasons why I invested in Chloe. Let me give you kind of 2 other quick examples. One is something called Home Team Ventures. And Julietta, brain freeze here, the 2 founders, Julietta and Ali, both came from the housing industry, from a nonprofit. And they were able to understand kind of how bringing technology into construction could start and to make a difference in terms of what Julietta Morade. And so what they found is they invested in Icon, which was one of the first companies to do 3D printing of houses. Now they're going to 3rd world countries and villages and printing houses on site. So they're going to top technology companies and figuring out how to blend technology in, and then using helping people to prove out this thesis and then bringing it back. Now, I believe they're going to have excellent returns, because I believe the construction industry is kind of ready and primed for the introduction of technology into what's going on. But that's one example. A second one is Alante. And these women who came from the fashion industry are committed to sustainable fashion, safe working conditions, not using childhood labor, and kind of a circular economy. And again, they're working with, when you see companies like Patagonia and Eileen Fisher starting to do kind of the circular economy, and it's gaining traction and kind of reworking. Even in Pittsburgh, we have someone, Dayal, that Ian Rosenberger, has done with First Mile. So there are a lot of funds that develop that are focused on a particular vertical. There's another one or two that are in sustainable food systems that you can get excellent returns and make an impact. Probably, the most visible example lately has been Oat Milk. Who heard of Oat Milk 3 years ago? Anyone? Anyone? Right? Oatly just did, it was a couple $2 billion on the valuation. And again, what we're finding is the whole plant-based food movement helps address climate change, helps the environment, and creates safer, healthier people for improving our healthcare systems and outcomes. So there's this huge beneficial effect. And so I just don't buy into this. It goes back to like the doing good and doing well. When I work with students that I teach and mentor, I think it's a false choice, and you also have a long life cycle. You have 80 years to do both. By the way, if you donate $5 to 412 Food Rescue, among others, you are, a philanthropist. I don't care what, the Mellon Foundation or Hillman does, $5 makes a difference. So everyone can be a philanthropist. People, now with a $100 investment, you can be a venture capitalist. And it's the idea of democratizing. And, the reality is if you talk to people in the food movement, every meal you eat, you vote.
That's
every
true.
Every time you don't eat meat, you vote. So remember, you're voting 3 times today, or 2, depending upon who you are.
That's so true. And I want to be mindful of people's time here. And I want to ask the two of you, what is an action any founder in this call what's one action they should do after they get off of this call? And it's not like feel inspired or you got this. Like, what is something they should do after this that helps them with either an investor relationship, getting an investor, raising a fund, whatever?
Yeah, get your data together. I mean, you don't need fancy systems like Carta and Proceeder and Seraph and all these other things. Just open up a Google folder and get your ducks in a row, because anyone is going to ask for that information. And if you're going to meet them in an elevator or a coffee shop, or if you have a meeting that's set up, have it prepared. And then another thing that I like to do in that data room is I date all the documents first. Okay. So I can drag it into a subfolder if it's outdated, but they will always know what is the most updated P&L, the most updated pitch deck, the most updated executive summary, team bios, etc. You know what to put in there, everybody. You filled out enough of these applications. And if you don't, just go to Republic and look at what are on those profiles. That's all they're asking for. Any investor will ask for that. So get the data together, stay on top of the data.
Fabulous. Evan?
And I would just add, I would say, be vulnerable. I think honesty and vulnerability is an important part of leadership, and it's an important part of trust building. And it is okay to, tell people your story. Like, just why are you passionate about this? Why do you care so much about this business that you're driving? And it may be painful to tell that story. Sometimes, when I talk to certain people who, depending upon where they've come from, have had difficult journeys getting here, but that just makes me, their honesty, their vulnerability makes me trust them that much more, that they were willing to be open and vulnerable with me.
So maybe after this, as an action, is we all get concerned on the day-to-day operations. Maybe after you've done the data collection, write the question, why am I doing this? What is this for? And either write it out or voice record it or however way you like to express yourself, do that. And think about, one, reflect it for yourself. You're doing this for you, but then think about how can you let someone else understand that too? Yeah. Maybe share it with a friend.
So Sonia says, starting from the beginning, what are the ways to find investors? Listen, fundraising is sales. So you have to get creative and go where they are, is what one mentor always told me. So if someone is speaking at an event, you show up, right? Go to PitchBook, go to Crunchbase, go to AngelList, start creating yourself a CRM and do the research on the front end, because after all, oh, how sweet. After Daniela, that was so cute. After all the investors that you research, maybe only 5 out of the 100 are really going to be the fit for you. But just like in sales, that's customer discovery. You've got to go out there and you've got to kiss the frogs. I didn't mean to say that, though. That was an opportune time. But you really have to do that to find your prince.
That's right. Well, thank you all. Thank you to the both of you for sharing your wisdom and spending the time with us this evening. I hope that everyone got something out of this. I know I learned a lot. And thank you so much. And I know it won't be the last time we'll talk.